Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Thursday, March 14th, 2024. The markets remain very volatile, and in particular, the NASDAQ and the S&P. Well, actually, I need to add the Russell and the Dow. All of them, actually, today were volatile, pretty much from start to finish. Now, within the NASDAQ and the S&P, we saw a dynamic shift between Microsoft and Apple, Google and Amazon, versus NVIDIA and Tesla, basically. AMD also tossed into that mix. NVIDIA getting pounded lower again today. Tesla trading all the way down to 160 today. AMD following suit with NVIDIA. Reverse of that, we had Microsoft up, closing up 10, was up higher during the day. Apple finding its footing again today. At one point up closer to 174, I believe, but up over $2. Now, when you break this down, because both the S&P 500 and the NASDAQ are both capitalized, cap-weighted indexes. So when we go over and we just look to see what that weighting is today, lately it has been that Microsoft sits at the top of the chain simply because of the price. So right now, Microsoft remains at the same, but Microsoft is 8.78, almost 8.8% of the move within the NASDAQ. Now, let me just double check with the S&P. Again, Microsoft, 7%. Apple, almost 6% within the S&P. So within the NASDAQ, Apple is 7.66, so we'll say 7 and 5/8, where Microsoft is 8 and 7/8. So those are pretty high. So what is happening in those stocks is really pushing the index up. Then we had NVIDIA, along with Tesla, doing about, I'm going to say close to 9% combined, pushing in the other direction. And of course, when NVIDIA and Tesla were actually going down higher or stronger than Microsoft and Apple, and we had this pull. Now, yes, there were other stocks in both indexes that really were getting beat up today. Adobe and the NASDAQ being one, was down pretty heavily. And I'm just checking along the list just to kind of check it out. Of the bigger ones, we have Booking, which was both, again, very volatile, but doesn't carry that much weighting in the overall index. So, but as we can see, overall, the market was extremely volatile in terms of just these intra-minute, 2-minute, 5-minute moves. And so let me just start to what I think. First thing you might notice, I shifted back. I really went over it again and again, and I'm going to have to be very satisfied with the fact that I do believe that wave one of this finishing minute fifth wave triangle did complete at the March 1st high, and that we finished wave two at the March 5th low. So, and there was between me and Sasha, those of you that do listen to our podcasts on the weekend, Sasha also moderates with me in the trade room. And it's okay because Sasha is counting this a little bit different. He's putting the wave two over here, and that this is a Y. And I am basically I don't want to use the word purist, but I think that's the only one you're going to be able to attach to me in terms of Elliott wave. I do realize that there are a lot of changes that have been occurring with the introduction of algorithms, with the introduction of how things trade in the 21st century versus how they traded in the 20th century. And those changes need to be brought into Elliott, and one of them is how flat corrections basically are counted or how they're labeled. And what it really kind of works out to be, as best I can tell, is that I may count something as a double ABC or even a triple ABC, where the newer methodology is WXYZX, WXYZ, or different formations thereof. So I realize this, but I kind of have to go with what I'm comfortable with. And so Sasha does not see this particular move as being 5 waves. Now, at first glance, you got that tail right there. It was a big one. And so what I did, I'm just clarifying my position. When I drop it down to the line chart, which is done on a closing basis, which is the purity of Elliott. Elliott was not done on a candlestick basis. Elliott was done on a line chart. And Elliott was done by taking that number once an hour, plotting it on a graph and connecting the dots, thus creating the waves. So, but when I look at it, I do have 1, 2, 3, 4, 5. So, which is why originally I counted 1, 2, 3, 4, 5, stuck an A up there. So again, it is going to be a zigzag. The third wave needs to be a zigzag. And so under this count, it would remain so. Now, this is where it starts to get a little bit what I might call squirrely. Because that being wave A of 3, now we're going into a B of 3. And that B of 3 has to also be an ABC structure. So far, so good. We get the A, they get the B. And now, as I left it yesterday, still, so the analysis that I presented yesterday still held true today because I was looking for a C wave no matter what. No matter how it's going to be counted out, looking for a C wave down. But I had anticipated that this C wave might go further than what I would think of. So I wanted to give the market more room. And then I realized is once I got my channel lines on and drew the additional fibs, there is that possibility. Now, again, where we've come today, we came pretty close. This low was 18,161. And basically, we'd be looking for the C wave to come below 18,138. But here is the deal. Should the market have, that was it, that's all we're going to get, I will put a C there and I will put wave 2 there. Excuse me, ABC for B of 3, and then look for that rally to carry it higher and likely up towards the top of this. Now, one of the measurements that I did, and I'm going to put it back on, go here, I took it off because I thought we got to leave it open. Look where it came to. So when we're comparing wave A and wave C, very similar into how we do it with Fibonacci levels. Wave C can be equal, so equality is usually going to be number 1, whether it's a fifth wave to a first wave or a C wave to an A wave, equality. And that drops it down to 17,962 accordingly to how we've got it tracked right now. The second is 0.618, and that's where it did come to today. And on that basis, I would put it in. And to tell you the truth, when it was diddling around down here, it did appear. I really thought, okay, we're gonna continue. I thought we were gonna get down to at least 18,100. That was my feeling at the time, and I was actually trading back in that period. So it kind of came shooting down, rallied, came down, rallied, came down, and then came the buyers. And so, as so often in this market lately, we'll make a major low. So whatever's happening in terms of it, the institutional trade The push to get it down to a particular level, which again may be due to the daily, the zero DTE options and gamma flows, that they get it down there to monetize something. When they're done, and they turn in, take it in the other direction. And often it's like done and run. So it's not like we're hanging out down there to see who else has got something to fill. It's done and run. And that's pretty much what happened. So with that low being 18,161, the regular close was 18,000. Let me see, was that right? Not quite that high. Yeah, actually it was within this final. I believe the close was 18,259, but the market had run up to 18,299 prior to the bell. 130 points in 30 minutes. These are quite dynamic moves when you think about it. So when we're talking volatility, that's kind of what I'm talking about. The speed at which the market is shifting and moving around. And there are oftentimes when you're trading this, you're like, do I jump in? I don't know. They flip it around, they move it this, move it that. Next thing you know, somebody hits a bid and they just run the bids. They just hit them. And next thing you know, it's down another $10 or $20 while you were trying to decide, do I get in? And so it's not as easy as one would think. So you have to have levels. You have to have a trigger point, whether it's a moving average, whether it's an internal price resistance or support. It could be points of control. It could be a lot of different things that trigger and give you an indication of sell. I mean, there are a lot of indicators now being brought out by various people that are functional. If you're going to use one, I always suggest always go in and learn everything you can about it. All the nuances, so that you know exactly if it's a strong signal, a weak signal, a good signal. Do I wait for something else? So learn about your indicator. If it's something you're like, I like the way this functions, and I'm going to go ahead and give it a try. Learn about it first. Back to the market. So on the 15-minute chart, we did get 5 down. Then we did get an ABC up, and then we started back. And again, this is just kind of ugly chop all the way down. So whether this was, I'm not sure what all this was. That's almost diagonal like, right? Very tight diagonal coming down. But usually it'd be a fifth wave. So I'm like, okay, but here it is. We run up and I thought, okay, this was all done. We run up and then it was like, nope, they brought it down again. And then they moved to a new low and they brought it down in 5. So I was like, wow, I'm not really sure how to count this particular move. So I have to take it as a whole and realize it's either going to be part of the C wave, and we likely may still have one more, or it is the completed C wave, and I can label it out as such. However I might be able to, we have 1, 2, 3, 4, 5, wave C. Strange. It's not pretty. I know that. Even if I take it over here and take a peek, a little bit nicer, a little bit cleaner. The 1, ABC 2, 1, 2, 3, ABC 4, 5, wave C. So that's kind of how I'm looking at it. I'm leaving it open still. I'm not going to cloud up my charts and with all the internal on this, because it gets very cluttered very quickly. But I will say 1, 2, 3, 4, 5, wave A of this, or wave 1 of the C wave, ABC wave 2 of the C wave, and 3 of the C wave, 4 of the C wave, 5 of the C wave. And trust me, I get all that. I get all the overlap. And there's just no way around it. And again, being more of a characteristic or more of a purist of Elliott's work, this would not work. We see the overlap. So, but it's what's in here and not here. So it's just going to have to fit for right now, unless, of course, we get another charge lower overnight during Globex or tomorrow when we come back online. So I'm leaving it open, but I do believe we're in the C wave of wave B of 3. So let me take this back out to the hourly chart. So I believe we're in wave B. There's the A of 3, the B of 3. I am kind of looking for it to hold within the parameters of the trend line, which currently right where we are should bring us down to 18,054. If it breaks real quick and comes back, that would be acceptable. If it breaks by a lot, even keeps below, then it's going to be something else in my book. And we're going to have to go back and figure it out. But cycle-wise, now again, I'm working on short-term cycles. So we have a 90-day, we have a 30-day, we have that how it breaks into thirds. So the cycle work continues to suggest that the market should be rolling into a trough or a cycle low mid to end of March. And then the cycle reverses and we start to go in a up, the cycle start to move back up towards a top, a cycle high. And so when we're looking at the NASDAQ, when we're looking at the Qs, when we're looking at the spiders, it continues to suggest, now this is not presenting the same type of a picture, that we're looking at the market as just being in a stronger uptrend. I mean, it does here. So we're looking at we look at a peak, a trough, a peak, a trough, peak, trough, all the way up. So, but it kind of suggests that though I'm looking towards a completion point, it may not necessarily, it could come in while we're still within this final fifth wave. So we get up on a 3, we pull back in a 4, and then we rally back in that fifth along with the cycle, which is going to push this whole thing out to May, April, May. And then by then we will be again in earnings season. As it's time, we're going to reach the end of the first quarter. Okay, guys, give us your earnings. And they should start pretty quickly, right in April, and take us all the way through into May. So it could be very interesting and could create the situation that we reach the pinnacle, we reach the top. Now, what works against this? I'm sure many people that are more broad-based and looking at other markets realize that the bond market was off pretty strongly today, as the PPI came out today and again was not suggesting, along with I believe it was retail sales, are not suggesting that the Fed is going to be cutting anytime soon. Not necessarily, and also PPI didn't get the robust welcome like we got with the CPI. It's so strange. I mean, we should start to go, okay, because we usually it's like, okay, the CPI could get a negative reaction. PPI, though, would be okay. CPI got a good reaction, and PPI should not be okay. It's like, okay, which one do we want to do today? Because both of us showing that inflation is not tamed. Inflation continues to be a problem. And the jobs market actually continues to be robust. So it's like, and I know how that has to figure in, but I also believe at the same time, I'm always happy when people are being able to work and afford their lives and or their families, or they're just able to do what they need to do, participate. So, but at the same time, there is a lot of wage inflation. There is still a tremendous amount of money out there being transacted, being put into the market, being moved around in the market. There's still a lot of money in the whole system. So how that all solves itself, another conversation. Right now, I think we're still within wave 3 of minute wave 5. So, and I'm leaving open the potential that we have additional downside. Now, tomorrow is expiration. Now, it is a triple. And tomorrow we have Empire State Manufacturing, Import Price Index, Industrial Production, Capacity Utilization, and Consumer Sentiment, the preliminary. Those all came out between 8:30 a.m. Eastern, and then at 9:15 we have Industrial Production and Capacity Utilization, 9:15, and then at 10 a.m. Consumer Sentiment. So most of it before the market, 10 a.m., half hour after we open. Now that's tomorrow, plus expiration. Now, big one for Apple. What do they want? Do they want 172.5? Do they want 175? Right, that's where we're sitting. Or are they going to force it, going to squish all the longs and force it back to 170? We don't know. So you can start to look to see where the majorities of the contracts are. NVIDIA, it'll be wild and woolly. That's my game plan here. And NVIDIA, it's still, I think, going to be wild and woolly tomorrow. It's a major expiration in NVIDIA because between the expirations, the monthlies, NVIDIA has gone to 974 and come all the way back. Not all the way, but it's dropped over 100 points and raced back above 900 and dropped again. So it's going to be a free-for-all in that one. And in Supermicro, that one's been pretty wild, still sitting about 1100. I mean, how long is that going to last? Where's it going to get pushed? Tesla. Wow. I mean, these are stocks that are really showing a lot of volatility. And now I have options expiration tomorrow. And that's what's, I think, to me, folks, that's what's going to be in control. Moving averages now here in the NASDAQ. You can take a look. The 200 flat, the 50 heading lower, the 20 definitely lower, the 4 and 8 following the market. So we've seen this picture go from not so nice back to nice, not so nice. Just ebbing and flowing as we flow around here. I think we'll be able to hold on if they don't go too much deeper, getting the 50 below, but there's not going to take much, at least on the hourly chart, to get that 50 below the 200 and maybe force some downside into this. Over in the S&P, S&P came real close today, overnight in Globex, to pushing up and making new highs. Real close. Didn't quite. So again, I haven't changed this one. ABC, wave 1. AB flat. IB flat. Now, couple of things within the flat. This could drag out. It's holding the border, the trend lines for this triangle. Came down and touched it today at 51.88 with that low being, let me just tell you, that low was 51.88, hit it right on the nose when we connect them. So that was good. So is that the C wave? And it's done. Possible. If not, then we're going to come back down and we're going to break this. And then it might be turned into something a little bit different. I'm not counting on that. It would be a little bit more difficult to kind of take it from this and put it out over here somewhere. Not impossible, but we'll see. We will see how this all comes in. Because if the 2 goes down here, it's actually wave 2 connects to wave 4. So, and wave 1 connects to wave 3. So we can make slight alterations to the whole thing. But additional downside, because this was a strong rally off of that one too. Let me go down to the 15-minute. It was a strong rally off of this low as well. 51.88. It got us back up to, wow, 52.20. Oh, wow, it's a lot of points. It's just massive rallies where these things get pushed. SPX, wow. Yeah, it's expiration. 0 DTE options at work. So either we're finished and we continue to rally and it's going to be A, B, C, and it was kind of like a running correction, or we swing back down and this was the internal. It's also very difficult to pinpoint exactly, because this is very similar, right? Ding, 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 up, down, up. So we got down there, we went up, we got down there, we went up, like this was it. We came back down, created a new one, and then ran to equal the other one. So it's very, very strange right now to me. And I'm going to let the market come out. So, but what I will say, either we're done with that C and could put a 2 here. Excuse me, let me take that back. 1. Oh yeah, could be the 2. Right? Because this is all the B. And this is either that or this is wave 2. And this is A of B, B of B. No. Take that all back. Wave 2, A of 3, B of 3, C of 3. I may change that now that I think about it. A, B, C. I may change that. And I should have done that before I sat down. So let me just go and put that marker in case that's what it is. Let me remove that to get rid of it. Let me change this. My apologies. I thought I was all set. I just go like that, put that there, put that there. And this turns into, it's extended, but I'm going to call it wave A. And what we've done is wave B, and it did come down and hit perfect. So S&P should be all set. We'll leave open the possibility that it can come back down and put in some additional, and I will add a very quick fib on that. So if we're looking for A, we can just put in retracements actually. And we'll go here and add the retracement for wave B. So it came down just below 618, and that's good because there are a lot of times people are talking about, particularly in the newer ones, that it should come down to almost 90%, and that actually would cover us if it came down a little bit further. I just don't want to see it below 51, 57, but if it wants to come down here, then that also could be, but it's going to be a swing lower. Then it should be a hard swing. Otherwise, I would consider that done, and we're ready to begin to rally. Now, just kind of using the same fibs on what we might want to look for in the upside. Here we have that C would equal A at 52.84. We're looking for more. We also have much higher, but we want to try to keep it in the parameter, which suggests 100% 52.84 up to about 52.95. Eventually, though, we would be looking for this thing to move outside of the, we get, there you go. So you do know the further out we go, it does cross higher. So here we have it way up here, where we're getting closer to 53.50. So if we just follow A, B, C, We can get closer to 53, depending on how far, how long it takes. And then we come back down into 4 and we come back into 5. So it should follow. So, but right now I am going to leave it this way, and I apologize for not having that ready for you all when I sat down to do this. But we're going to leave open the potential for a C wave to not be finished. Otherwise, then it's ABC. AB, excuse me, AB internal. ABC. And we'll put a B wave underneath it. Strange pattern. It truly is a strange pattern. So this would be all the A and then a very quick B and then a C. I don't particularly like it, but it was a bizarre market. All right. Again, tomorrow morning, I've already listed what's coming out. I'll do it one more time. Empire State Manufacturing, import, industrial production and capacity utilization, and consumer sentiment. And that's going to be it for today. The next Elliott Wave update will be on Monday, March the 18th. I will make an attempt to once again make an update over the weekend, a podcast to give a little bit of an update to the big picture. Have a great trading day tomorrow. Have a great weekend, and we'll be back with the Elliott Wave update on Monday.